Thanks very much, folks. Again, Craig Lindsay, President and CEO of Otis Gold Corporation. A little bit of background on the company. We're a gold company. We're focused in the state of Idaho. We've got 5 projects. We've got an existing resource today of 722,000 ounces. That's 43-101 compliant. Our flagship project is the Kilgore Gold Project. That's what I'm going to spend my time talking about today. But before I get into my discussion on the company, let's talk really briefly about what's going on in Idaho itself. Long history of mining in Idaho. It's a great jurisdiction to work in. Some of you folks may have heard of the Silver Valley up here in the Panhandle. Very high-grade underground silver mines. Down here in the central part of Idaho, you have the Thompson Creek mine. It's the world's largest open-pit moly mine. In the southeastern portion of the state, southeast of Pocatello, there's very large open-pit phosphate mines. So there's lots of current mining activity going on in the state right now. With respect to gold, there's a long history of gold mining in the state. That said, there is no current gold mining going on, but we're looking to build on a lot of the historic gold activity in the sector, and we're competing with about 7 or 8 other junior companies that are out there. As I mentioned, we've got 722,000 ounces within the company today. We own 100% of those resources. The Kilgore deposit itself has 487,000 ounces, and we also have a second project called the OOO project, which is a bit of a non-core project. Lots of potential in that project. We're looking for a joint venture partner for it. We've been spending all of our money on the Kilgore project. A little bit of background on the share capitalization. We've got 50 million shares outstanding today. We're trading at about 16, 17 cents. Gives us a market capitalization less than $8 million. From a share ownership perspective, management owns about 13% of the company. Institutions right now own about 35 to 40% of the company. Galena Asset Management out of Geneva is our largest institutional shareholder. That's not a pretty map to look at, or a pretty chart to look at, but I think there's a good opportunity to kind of turn that chart upside down, and that's what I'm going to talk to you about today. The management team here, the takeaway from this slide, and it's a real important feature of our company, and that is that my technical team made up the core of the old Echo Bay Mines U.S. exploration team. Specifically, one of our board members, Don Ranta, was the Vice President of Global Exploration for Echo Bay Mines. Dr. John Carden was the Director of U.S. Exploration for Echo Bay, and Mitch Bernardi was a Senior Project Geologist with Echo Bay. It's kind of rare in a little junior like ours with a $10 million market cap to have that kind of quality in your technical team. And there's another connection to Echo Bay and Otis, and that is that Echo Bay was one of the largest operators on the Kilgore project back in the mid-1990s. Basically from 1990 to 1995, Pegasus, Placer Dome, and Echo Bay Mines operated extensively out at Kilgore, developing this current 487,000 ounce resource. And when my guys were at Echo Bay and leading the exploration team, they were also the ones that were leading the exploration at the Kilgore project when Echo Bay had it between 93 and 95. Now this project, the takeaway from this slide, we've got about 5,000 acres. Really important feature here is that we have 100% ownership in this claim block, and there's no NSRs on the project. So we don't have to spend any money to maintain our ownership in the project. The key takeaway in terms of the potential out at Kilgore is we've got this Mine Ridge deposit. That's where you've got your 487,000 ounces. That's where we've done almost all of our drilling to date. We're coming out with a new 43-101 resource estimate out there. I don't want to put a number on it, but we're quite pleased with how that resource estimate is growing, and I'm quite confident that with another season's worth of drilling, we're going to be able to push the Mine Ridge deposit over 1 million ounces. And in terms of size potential, we talk about this 2 to 3 million ounce potential at a minimum that we see out there. How are we going to get there? Well, we think Mine Ridge is going to go over 1.5 million ounces. We've drilled our first discovery holes down at the Prospect Ridge target, and it's actually, based on the drilling that we've done last year, it looks like the Prospect Ridge and Mine Ridge are one large connected deposit. And then up in the north, to the northwest, we've got the Gold Ridge target. Has the exact same geologic signature that you have out at the Mine Ridge deposit. The main controlling feature of this deposit is this northwest fault, and you'll see Gold Ridge, Mine Ridge, and Prospect Ridge run right along strike to that deposit, or to that fault. Another thing to point out here, we don't spend a lot of time talking about it, but we have another set of targets out at the project called Dogbone Ridge. Dogbone Ridge, again, same geologic features that Mine Ridge has. There's been some discovery holes that have been drilled out there historically. At Otis, we have gone and completed a bunch of geophysical work out there about a year and a half ago, and I've come up with 5 targets, geophysical targets that are about 5 times the size of the Mine Ridge target. So you can see if we start, we've got Mine Ridge and it's growing, that asset isn't going anywhere, and if we start to hit on some of these other targets, you can see how we can quickly grow this project. I talked about Echo Bay being out here between 93 and 96. It's very important to note, and all I want to talk about on this slide, is that when Echo Bay was out there, Kilgore was actually going to be their next production story. They were going to put it into production in a $350 gold environment, and it was very economic at that gold price. As you guys know, in the late 90s, the price of gold dipped well beneath 300. And Echo Bay dropped all of their development projects and focused on their production. But the point is that they saw 2 to 3 million ounce potential when they were out there, and they were going to put this into production in a $350 gold environment. If I haven't mentioned, this is a volcanic-hosted epithermal gold system. The deposit has its genesis at Yellowstone, which is a North American stationary hotspot. These circular things here on your slide are volcanic calderas, all which had their genesis at Yellowstone, and as the North American plate has moved westward, these volcanic events which originated at Yellowstone have also moved westward, and they're now, like in the northern part of Nevada, there's this site, this volcanic calderas in here that originated at Yellowstone are the site of some very well-known volcanic-hosted epithermal gold deposits, many of which are produced. We have exactly the same thing at Kilgore. It's just a much younger version of what you have down in the northern part of Nevada. This is a cross-section of our deposit. I'm not going to get into the specific details on the geology here, but what I do want to point out is the main host rock of our deposit is this green material. It's a volcanic lithic tuff. What has been bringing all of the gold up to the surface has been these rhyolitic domes, and they're the last gasp of these volcanic events when the calderas have been formed. They bring the hydrothermal fluids up to the surface, and that's what's those hydrothermal fluids are gold bearing, and there's a number of events that happen that allow those hydrothermal fluids to drop the gold out into these main host rocks here, which are the volcanic lithic tuff. Last year we had a pretty extensive drill program. We actually drilled 9,200 meters out at Kilgore. We had a great deal of success in terms of confirming mineralization at Prospect Ridge. We extended the mineralization dramatically at the Mine Ridge deposit. We did a significant amount of infill drilling. This deposit was originally drilled on 200 to 400 foot spacing. So over the past couple of years, of the 104 holes that we've drilled, probably 70% of them have been so-called infill drilling. And now we're getting into the more exciting stuff where our drilling has been stepping out and adding pretty aggressively to our deposit. As I mentioned, we're in the process of completing a new resource estimate, which is going to give us a better picture of where we stand today from a resource perspective. We're quite excited about that. I don't want to give a date on that, but it should be out in relatively short term. We've also done a lot of metallurgical testing, which I'll speak about shortly, as well as some soil sampling. Drill results. We've put down 104 holes out at Kilgore in the last 4 years. I've hit on 84% of the holes that we've drilled. So we've had a really, really good drilling success rate. These are the holes between 2008 and 2010. And you'll see we've had some what I consider to be trophy holes, 55 meters of 6 grams per ton, 64 meters of 1.89 grams per ton, 96 meters of 1.5 grams per ton. You kind of get the feel. We've had some pretty, there's been a lot of continuity in the drilling that we've done in terms of both the grade and the thickness of these drill holes. You're not going to be able to read anything on here, so you're going to have to trust me. And who trusts a stock promoter, right? But well, I appreciate that. We hit on 28 of 41 drill holes that we put down in 2011. This is the outline of the Mine Ridge deposit as it stands today. What's really exciting is that the last couple of holes that we drilled in 2011, we took down 2 holes, one that was 114 meters and one which was 118 meters, both which came almost right up to surface. So they're really some of the best holes that we've ever drilled out at Kilgore. This is where those 100-meter plus intercepts were. Right after that, we did a soil survey out here, and the blue stuff isn't exciting, but the colorful stuff is soil right in the soil at surface. So we've really significantly extended the strike length of the Mine Ridge deposit, and that's where you're going to see our ability to add a bunch of ounces to the Mine Ridge deposit. So it was really a very exciting time for us. This is just gives you an idea. It's a 3D model of the deposit as it stands today, and you can see the continuity of this mineralization. To give you a flavor for this deposit, it's about 900 meters long, maybe 350 meters wide on average, and from a depth perspective, the deposit is from 50 to 150 meters in depth, and it's on average thickness about 50 meters. So it's a really nice, continuous, solid deposit that we have. Something that a lot of companies don't talk about, it's metallurgy, and if you're dealing with companies that are sending out splashy drill numbers and big resource numbers, but they don't talk about metallurgy, it's generally because there's a problem with the metallurgy. This is one of the real differentiating factors of our deposit over other companies, is that this is a volcanic-hosted epithermal gold system. It's a quartz adularia system. Again, that may not mean anything to you, but almost all the ore is hosted in oxide material, and it leaches extremely well. Echo Bay did a lot of work when they were leading up to production in the mid-90s and got very good results, up to 94% on what we call half-inch crush material from column leach work. We have followed that up in 2010 with additional column leach work on half-inch crush material and got the same kind of recoveries that Echo Bay did, which was good. Then we have taken it a step further in 2011, and we've done column leach work on 1.5-inch crush material. We're just getting that back, and it looks very promising. For those of you that don't know, the less you have to process ore, the more economic your operations are, because crushing machinery is very expensive. It's a big line item in a capital budget for a new mine. So the less crushing you have to do, the lower your capital costs, and also the lower your operating costs. So a great feature of the project. Environmentally, we're in a great place. We hired Golder Associates to do an environmental scoping study to look at, answer basically the question of are there any material impediments to permitting an open pit heap leach operation out at Kilgore? Came back with a clean bill of health. Some of the key things that we've got here, we're outside of the view shed of any national park, no threatened or endangered species. One of the most important things, all of the drainage on the property is internal, where it does come out at the bottom of the project. Now our deposit is here on the side of a hill, and at the bottom where it comes out, it's something called Camus Creek. The relevance of Camus Creek is not a tributary of a larger salmon-bearing stream or river. That's very important from a permitting perspective. The other thing I want to point out, we've turned around all of our permits in 6 weeks or less with the U.S. Forest Service. So we have a great relationship with our regulatory authorities. Another important thing, and frankly I think right across the United States, most projects are blessed with this, and that's infrastructure. So in the U.S. it's a bit of a motherhood statement. That's not the case with a lot of projects when you go into more far-flung places, but what we have here in the United States, and specifically at Kilgore, we're 15 miles to a railhead. We've got lots of water on site. I think we've got a permitted well that probably pumps about 1 million gallons a year already for our operations. We've got power to the bottom of the project. We also have excellent two-wheel drive vehicle access right up to our drill sites. So infrastructure is excellent. In 2012, we've got a pretty aggressive program. We want to do 7,000 meters of drilling out at the Mine Ridge deposit. We're updating that 43-101. We're initiating baseline studies, which are environmental baseline studies, which are an important part of future mine permitting activities. We're also, the drilling that we're doing at Mine Ridge is largely going to be step-out drilling to identify limits of the deposit if we can find them. And we're also looking at doing a scoping study to firm up the economics of the project. This is also a great time for us from a project acquisition perspective because so many projects are out there. And so we are always looking for projects in our own backyard. You won't see Otis buying projects in, Argentina or Peru. We're going to stick to our own backyard, areas that we know the best. Final point here, just from a valuation metric point of view, yes, we're trading at a very low multiple. What this chart kind of shows you, these are our competitors in Idaho, and you can see on average in terms of market cap per ounce in the ground, Idaho companies trade at about $20 an ounce. We're trading at only $11 or $12 an ounce, so even relative to our competitors in Idaho, we're very undervalued. What's the upside? Well, when Otis takes its project of 43-101 resources up above 1 million, the chart beneath you shows you some valuations between companies that have resources between 1 million and 5 million ounces of resources, and what you can see is these things trade, even in this debilitated market, at much higher averages than companies in Idaho. So we're looking to, as more people become aware of what's going on in Idaho, this Idaho discount is going to go away, and number two, as Otis starts to build up its resources above 1 million, we think we're going to get revalued upwards. Summary here, we got real strong potential for expansion out at the Kilgore project. Number two, we own 100% interest in this asset, and in this market, that's a very important feature of our company. We've got a fantastic technical team. Suffice it to say, we've had very strong drill results coming in at 80% plus drill success ratio in the past couple of years. We've got to still have a good share structure with 50 million issued and out. We're still a liquid stock, and again, every company out there is troubled from a valuation perspective, but Otis, even relative to our peers in a difficult time, we are undervalued relative to our peers. So we think we offer a very, very good and compelling story from a valuation perspective. With that, I'm going to close out my presentation with a sincere thank you for coming out and listening to my story today, and I've really enjoyed meeting a lot of you folks over the past couple of days. So thank you very, very much. I appreciate it.